of estimates in the second quarter. Abhishek is standing by now with the fine print. Abhishek.
Well, Shirin, as you mentioned, the numbers look really good when compared to other banks as well who have been losing out on the net interest margin. And Axis Bank has actually surprised positively on the net interest margin. It has beaten our poll in terms of NII and PAT by anywhere between 2% to 3%. And the loan growth on a YOY basis as close to 23% is perhaps the best that you are seeing in last 29 quarters or even more. Deposit growth of 17.9% YOY is one of the best in last 7 quarters. Sequentially, the growth is anywhere between 1% to 2%. Advances growth 22.8% YOY and 4.5% sequentially. This has meant that the credit deposit ratio has actually improved to 93.9%, which is one of the highest in last 20 quarters. So the improvement in CD ratio this time around has aided the net interest margin as well, which has expanded to 4.11% when compared to 3.96% in the same quarter last year and about 4.1% sequentially. Analysts were working with a decline of net interest margin by about 5 basis points as per Kotak Securities estimate, and over here it's improved. You are not seeing improvement in ICICI or Kotak or other banks as well, so this is heartening to see over here. Asset quality, annualized slippage ratio of just 1.45% is the lowest that you are seeing in last 12 quarters. Analysts were working with a slippage number of 3,500 to 4,200 crore, but it has come in between 3,200 to 3,300 crore. Gross NPA ratio is at 30 quarter low and net NPA ratio is at 33 quarter low of 0.36%. Joining us now is Ashutosh Mishra of Ashika Stock Broking. Ashutosh, what do you make of the initial numbers that have come in?
So Axis Bank has surprised us on the NII front out there, and mainly led by continuously they are increasing their high-yielding loan portfolio, which has helped them to buck the trend on NII front compared to the other banks. And even on asset quality, there is a quarter-on-quarter slippage has come down, which has resulted into a lower credit cost in this quarter out there. So these are the two major reasons where they have delivered very good set of numbers, and because of which the numbers are above the street estimate.
Well, Ashutosh, as you mentioned, even in my preview during the day, I had been mentioning that the loan growth will be focusing on the high-yielding portfolio, and that has actually aided the net interest margin this time around. We also have Prakash Diwan, our market expert, with us. Prakash, how do you see the result, and what would be your expectation with respect to stock reaction tomorrow morning?
So I think certainly, as you said, it's a beat on all counts. Quality of book, the growth in the book, the CD ratio, and of course a few things. For example, the cost of funds has always been softer for Axis, given the huge favorable impact of the Citi acquisition. That has kind of started to show in terms of what it can do going ahead. So we had a couple of quarters of when the bank digested that acquisition, and now it seems like it's on its way to a faster trot in terms of growth as well. So I think loan growth is impressive. Quality of book, as I said, the cost of funds has been absolutely stunning. Overall, the market will probably like to reward this, but then we know the mood of the market these days. Even on Wednesday's session, today's session, there was not much that was happening for banks in spite of everything being good in the numbers, except for an SBI or some of the odd, smaller banks. So I believe the market will take its time to reward it as the mood changes, but it definitely says something which sets it ahead of ICICI and HDFC as far as performance is concerned. So if Axis deserves a little bit of a re-rating in terms of flows, it'll probably be visible tomorrow onwards. Of course, subject to, as I said, the mood of the market being positive.
Well, that's a word coming in from Prakash Diwan and Ashutosh Mishra. Back to you, Shireen.
All right, Abhishek, many thanks for joining us. That's